the question I have is, it seems like from this conversation, everything we've read, the long-term trend is going to be moving more towards remote work from home. Do you think that that's absolutely the case, or can you see a future where the office, a place where employees collect, so remakes itself into something that it becomes more attractive again for people to come back? Or is it simply that case that those demographics with kids and minorities and everybody else that preferences it, even if you turn the office into something more attractive, they're still going to prefer remote work? In other words, where do you see this in 10 years or 15 years?
Great. So just to be clear, most people want to be a mix. So I just, again, give you some numbers. So if you survey people, roughly 20% of people want to work fully in person. So they tend to be, young 20-somethings or 50 pluses, and they just say, it's really lonely being at home. I just want to come in every day of the week. About 30% of people want to work permanently remotely at the other end. They tend to be, middle-aged with a nice house, younger kids, and they just, they're happy and they don't want to go in at all. That's a long, painful commute. And then the remaining 50%, which is, almost the majority of people actually want to come in a mix of days and work from home. So that's where we're heading. We're heading for a world where it's hybrid, where you're in some days and at home some days. To be clear, that's not that radical. So it seems like it's a really radical change versus pre-pandemic. But if you think back to 2019, pretty much everyone listening, I'm sure, sometimes work from home. Maybe it's after work in the evenings, maybe it's on the weekend. There wasn't this clean-cut divide for professionals already. Sometimes you would, take a day off or come in late at lunchtime. So I think the future, as I mentioned, the next, let's say 2023 is going to look about 25% of days are going to be work from home. If you extrapolate out, the big change is going to be technology. So this is like Econ 101. Do you think what's happened to the hardware and software market? You've got the number of work from home days has gone up by roughly 5x. So if you're trying to make new products into that market, you suddenly see a massive expansion in the market. And the returns for new software or hardware to support work from home has exploded. So what I see from talking to firms, that they're swiveling rapidly to saying, what products can I make that's going to make that, serve that market? And so the technology to support working from home is going to rapidly improve. So I think holograms and VR, better audio visual, better software, etc. And in fact, another paper I have looks at the number of patents from the US Patent and Trademark Office that mentions the words remote work, telework, work from home, etc. That was about 1% running up to the pandemic. And then from March 2020 onwards, this number starts to climb up and up and up and up. And it's now like 2.5%. So that tells us that there is an explosion of better technology. I've kind of lived through this. So working from home for 20 years, when I started working on this in 2002, technology for work from home was pretty bad. So if you had a laptop, it's clunky. It was conference calls. There was no video calls. Conference calls, you had to pay for a service. You couldn't just naturally do it. You couldn't send, there was no cloud. There's no document sharing at best. You could email small files. It was horrible. And if you ask people what it was like in the 80s, they're like, it was terrible. Then my boss would, drop piles of paper for me or vice versa. So technology, what we're doing now, working on Zoom, that really took off from, video calls were kind of good from 13, 14, 2015 onwards. Cloud, document sharing, again, Dropbox, this stuff is only about the last 5 years. So I think another trend is, it's not clear what the technology will be, but for sure there's going to be some major technologies that are going to come around. I don't know if it's holograms, I don't know if it's VR, I don't know what it is, to be honest, but 10 years from now, we're going to look back and think, 2022, that was really bad. Didn't we used to have like Zoom calls and like use Dropbox, we have so much better stuff now, or Zoom is so much better, etc. So I just think as time goes forwards, we're just going to build momentum on this. It's not going to be as abrupt as the pandemic, but I think we're going to slowly trend upwards.
In terms of the trend, what about the trend for outsource? What about the trend? I've heard some managers suggest or threaten their employees, look, if you want to work from home, I can go all the way and I can hire a bunch of people in Bangalore at a small fraction of your salary to do the same job. Are we seeing any kind of international outsourcing of jobs? Look, if they're going to work from home, let's just go the whole 9 yards and find the lowest cost employees that we can anywhere on the planet?
So yes, that is a genuine and real threat. So to go back into the three groups of the workforce, the 50% that are fully in person, that obviously is irrelevant for them. The 35%, whatever, that are hybrid, folks like that, which is me, you, probably most people listening, it's hard to fully outsource. If I think of me, just take me as an example, so I guess I know myself best, but, research, writing papers, doing data work, this podcast, etc. This is all fine doing it remote. Teaching and research seminars don't work very well remote. I really don't like teaching remote. I much prefer to be in the classroom. And research seminars and discussing papers is mostly better in person. So could I move to, Bangkok or Mexico and be as effective? No, for sure I couldn't. So right now in 2022, I don't think that's a serious threat. You could. So I've talked to some CEOs who are considering it, but they're aware there's a big trade-off. So they'll say, look, I could take people from hybrid to fully remote. Their productivity maybe goes down by a third, but I save an office cost and I move them. But I'm nervous. I'm nervous about what will happen, and maybe long run innovation drops, and that's really drives our company performance. The group that is definitely at risk for sure, and this does come up a lot when I talk to companies, is people who are fully remote. So people who are fully remote, their activities tend to be HR, payroll, IT support. They're quite skilled, but they're often not team-based, and they're often not that creative, and they're often not managing others. If a job falls into that category, for sure, there is some risk of outsourcing and offshoring. So far, it hasn't happened that much, because to do that, it's hard because you need to travel. If you're going to offshore the whole division to, India, so you got to go over there, set it up, recruit, etc. And it's hard currently. But in the long run, I think that certainly is a risk. For firms, you can think of that as an opportunity. For employees, now there's all kinds of complicated dynamics, of course, because think of a Bay Area company. One option, of course, is to offshore to, Mexico, Bulgaria. Another option is just to outsource or to move it to Mississippi or Alaska, where wage rates are lower. So I think certainly high labor cost markets in the US are going to see these kind of jobs move away. The net impact on low labor cost parts of the US is less clear, actually, because there's push and pull factors.
Let's talk about what it means, or the trends and the impact on the larger economy. You'd mentioned about office real estate, and that we really can't reduce the footprint yet, because we can't just sublet 2 days a week and use the full office the other 2 or 3 days a week. What about residential real estate? And let me throw some statistics to kind of frame the discussion. Redfin does a lot of detailed data on the residential real estate market. Pre-pandemic, maybe 15% of homes would trade above the list price. Today, that's over 50% of homes that trade above the list price. And what that suggests to me is real estate brokers, the reason you hire a real estate broker is the first question you ask them, and the only question you're interested in is, what's my house worth, and can I get the maximum value out of my house? Well, they're supposed to help you price it. And if half the homes are going above the list price, they're struggling to try and figure out this new real estate market. How much of that do you think is work from home and is given employees the freedom to say, well, if I'm remote, maybe I can be remote in Tennessee and I don't have to live in New Jersey, or I don't have to live in Oakland and move and commute into San Francisco. I could move to Wyoming or Nevada. How much of that is, you think, impacting the real estate market? Or do you think it's a host of other factors that has everybody struggling to understand the post-pandemic real estate market?
Sure. So I'm going to talk briefly cover three real estate markets and focus on residential. So the three is offices, retail, and residential. So offices, I kind of briefly mentioned, demand is flat, but prices are soft. Retail, I can come back to, but that's where, city center retail is, where it's kind of Armageddon. It's pretty horrible, because if you look in big US cities, the number of professionals that commute days into city centers is way down. So expect, that's a really unpleasant market to be in. Residential is actually done well overall. And there's two effects going on. One, everyone listening knows, is just asset price effects driven by interest rates. And so as interest rates have been low, like any other asset class, they've done well. Now interest rates are rising. It's hard to know. I suspect, like everyone else, the prediction is that residential is going to soften. But within that, there's also this donut effect going on, which you can see very clearly in the data. So what working from home has done is led to a relative decline of pricing in city centers and a relative boom of pricing out in the suburbs. So if you think of, New York and San Francisco, for example, or Chicago, LA, or Washington, a whole bunch of people have said, look, if I'm going to post-pandemic work from home 2-3 days a week, I don't need to commute in every day so I can live a bit further out, but I do want a home office. And so very clearly we've seen I've been analyzing zip code level US Postal Service change of address data and Zillow pricing data. And it's very clear that people have left city centers and moved out to the suburbs. Often, mostly about 50-60% of that migration is to the same city. And B, that's pushed down relatively prices in city centers and pushed them up in suburbs. So, for example, for San Francisco, city center prices are on roughly the trend you would have seen from pre-pandemic. So, 2021, they collapsed, they're back to trend, but they've certainly not outperformed. Whereas if you look at the suburbs of San Francisco, they're way above trend. So they look like they're up 40-50%. And that's the big dynamic. Now, why Redfin can't price, you can imagine there's just tremendous uncertainty about how much is temporary and how much is permanent. Rental is like an extreme version of this because, purchase prices are more long run. And so they dropped less and they've surged less. Rental is just, extremely bouncing around. So I'm not that surprised. The work from home movement is the biggest impact on, urban and labor markets probably since, World War II. And so trying to price residential property into that is not surprisingly very difficult.
What about management? For those that are going to manage other people, this is obviously going to mean a big change in how to manage people. So if they look to their boomer managers for advice, are they getting the proper advice? Are they getting the proper counsel? Or are the new managers now that have to try and oversee a remote work staff, are they still feeling in the dark on this right now?
Yeah, so I don't think, from my experience, this is much more anecdotal, but I've probably spoken to 300, 400, 500, maybe more, probably. It's just so many. I'm talking to 2-3 managers a day in organizations. I don't see a big difference in age of whether people are coping well or not with this. I would say it's genuinely hard for everyone. It's like an enormous change. There's no one pre-pandemic was running a hybrid model. Not really. I mean, there are a few kind of outliers, but basically it wasn't really a standardized process. And so no one has any rule book. We're using theory and data and trying to figure it out as we go along. I would say, the most obvious rules for me, the advice is one, go to hybrid. Employees really detest being forced back 5 days a week. Everyone's got that. With a couple of exceptions, everyone's kind of on board. Step 2, coordinate. If you're going to run hybrid, get people in on the same days because the only reason they come in is to see their coworkers. I would probably pick Tuesday, Thursday or Tuesday, Wednesday, Thursday. Step 3 is if you didn't already have it pre-pandemic, make sure your management processes are focused on evaluating outputs rather than inputs. So what I mean is, Jim, if you're managing me, you could say, Nick, I'm going to manage you based on what you do, your teaching and your research and, your media impacts, etc., which is my output, which is what I want to be evaluated on, that's what I'm achieving. Or you could say, look, I'm going to evaluate you on inputs. How hard you are, how many hours you're sat at your desk, how many emails you send, how furiously you appear to be typing, etc. Now, pre-pandemic, managing inputs was okay. It wasn't great. You could get away with it. It was management by walking around and just watching what people do. It's not perfect, but it was kind of livable. Of course, with work from home, that's just a disaster because you can't see people. So that's the big lesson for management practices is output-based management so you can manage people remotely.
So what about consumption? There's a big discussion in the economy right now that in the post-pandemic era, we've seen a boom of goods consumption, which is driving goods inflation, and services have dipped. And the narrative on Wall Street is sit there, do nothing, hold your breath, and that will start to reverse itself as the economy reopens. How much of that's driven by this work from home change? How much do one's consumption patterns or consumption basket change because they're home 2 days a week, 3 days a week, as opposed to 0 if you were like a lot of people pre-pandemic?
It's a great question. I've seen the stuff you put out on this. It made me think. I'm not certain. I'll give you my view on it, and it'd be interesting to see what you think. So I suspect some of it will revert, but not all. So if we go back to our model of 3 groups of the economy, 50% of people haven't changed. They're in person. 30%, but they account for, half expenditure. They're really the key group. They've gone from working 5 days a week to being at home 2-3 days a week. Think of them as people like probably everyone listening, they're tech, finance, professional services. And then, there are some fully remote people, but they're not such a big share. So in terms of the people who are hybrid, if you're at home 2 days a week, depends on what you think the pattern for that's going to be. So when you're working at home, do you substitute going out to buy lunch and dinner, in Manhattan or whatever, going shopping, services, going out to, shows and stuff, for doing that in your local retail park or shopping mall, in which case it just changes location, but probably doesn't really change total quantity? Or maybe you buy yourself a fancy espresso machine at home and, Peloton bike, and you don't go to the gym and you don't go to the cafe. My guess is a bit of both. So I think we'll probably see somewhat elevated goods expenditure, because if you're at home, it's probably, I'm just self-extrapolating, honestly. I'm probably somewhat more inclined to buy goods, slightly less to buy services. But it's not like when I live at home, I still sometimes go to local Starbucks, and definitely using a lot of DoorDash and Uber Eats, etc. So I think we'll see a partial moderation, but I think you're correct. It's probably unlikely to fully revert back to the prior mix of goods and services.
It's a really complicated world out there. We've got massive inflation, recession fears, war in Europe, COVID, China issues. What the hell's happening? Everyone's got an opinion, but who's right, who's wrong? As co-founder of Real Vision, I've got my own view, but maybe I'm wrong too. And I want to go and find out more from real experts, real in-depth analysis. And I've hand-chosen my experts for this 2-week journey of discovery in global recession. Is everyone wrong? I've chosen people like Peter Zeihan to talk to him about geopolitics, David Rosenberg about the economy, and Pierre Andran, the world's most famous energy trader, about how to navigate the oil markets and where it's all going. This starts on May the 2nd. And I'm going to learn so much about what really is going on and how to best navigate it. Yes, not everybody's going to be saying the same thing, but it's going to allow me to piece together an investment framework to navigate these complicated times. Now, normally we'd give you a 7-day trial for $1, but because this is so important for all of you, and I think it's one of the most important pieces of content we've ever done, we're extending that free trial for 2 weeks for $1. So you get the entire campaign of all of these great minds. And it's only $1 for all of this. So just go to realvision.com/global recession to find out more and join me as I try and figure out what the hell's going on.